Welcome back. Motilal Oswal Mutual Fund has launched the MOSt Shares NASDAQ 100 exchange-traded fund, offering Indian investors a chance to gain from some of the best non-financial companies in the US. To discuss this new fund, we are now joined by Nitin Rakesh, CEO of Motilal Oswal AMC. Nitin, thanks so much for being with us on NDTV Profit. Now, talk to us about this new fund. This does give a great a method of diversification for Indian investors, especially where we have seen FI money in the first 2 months or first 3 months of this year flow out of the country. What are the risks involved?
Hi, thank you for having me on the show. Something, as you mentioned, this is really an opportunity for Indian investors to invest in some of the best brand names that are out there. It's really a play on global growth and innovation, with companies like, Google, Apple, Yahoo, Microsoft, Intel, Starbucks, Vodafone. It's really one of the real premier benchmarks that has all these names. Most importantly, these are high growth companies, as demonstrated by the earnings growth and the revenue growth. They are reasonably valued. They're in fact about 20% cheaper than the Indian markets. And most importantly, they provide you with the best diversification case, because the correlation between the NASDAQ 100 index and the Nifty is actually probably the lowest Nifty has with any other market in the world, at about 29%. So it's really a great way to play global growth with low correlation and hence high diversification. But clearly, I think the investors need to be aware of the fact that they're buying into a non-local currency asset class, which means they have currency exposure with the product, as well as the fact that they're actually buying into really a basket of global currencies, not just one or two countries. It's really a play on how the rest of the world recovers along with the US.
Right, Nitin, but isn't the risk involved of the US seeing a double dip recession? Now, so far in the months of January and February, we have seen the US markets outperform at least India, given that a lot of money has flown into developed countries, and we've seen good up moves in indices like the NASDAQ and the S&P. But can this performance be sustained? Everyone is talking about risk that exists, be it the Middle East, be it the sovereign problem, sovereign debt crisis that could erupt in Europe. Couldn't that then impact growth in the US? How much of an up move can investors expect should they buy this one?
I think that's a valid question, especially given what's going on in the rest of the world from a macro perspective. But keep in mind that when we look at an index like the NASDAQ 100, it's effectively not a play on US economy. It's really a play on much more than that. Roughly half of the revenues of these companies that are in the NASDAQ 100 index comes from outside of the Americas. So clearly, you're actually buying into a basket of global growth. Yes, they have a very high correlation with what happens in the US. But I think if you see the projections of their earnings growth over the next 2 years, which means December 11 and December 12, they're projected to grow at about 25%. Given the fact that their valuation is pretty much at a 10 to 12 year low, at about 14 times current year and about 12 times forward year, I think it's really a very compelling case from the point of view of what projected returns you might get. Now, whether that happens in a straight line or not is really a very hard question to answer. But clearly, I think from our point of view, it's a great diversification play that should add to a certain return profile, and hence lower the fact that your portfolio risk should be much more controlled if you have a low diversification, low correlation, high diversification asset class.
Right. What kind of response have you got to the fund, and what kind of listing? When are you looking at a listing for the fund?
I think we've just finished the initial offer period, so the NFO closed about a week ago. We are planning to list it on the 31st, so pretty much at the end of the financial year. And then, we hope to continue to see more inflows into the fund. We've seen a fair amount of uptake in the NFO period. Primarily, we spent a lot of time in educating the channels, the intermediaries, the IFAs, brokers, private banks. And I think at this point in time, our initial effort really was to make sure there is enough information and knowledge out there about global investing, or bringing in another asset class. And I think we hope to now continue to make higher ground as far as the size of the fund is concerned. We'll probably list with a fairly wide participation in terms of number of investors and the size. And we're right now working on finalizing those numbers for tomorrow morning.
All right. Very quickly, we've seen the markets jump up in the last couple of sessions or so. What are your predictions for fund flows for the rest of the year as far as India is concerned?
I think based on the first 2 months of performance, India was clearly underperforming. People found some pockets of valuation, and hence we've seen a little bit of uptick in the market in the last 2 weeks. And surprisingly, post Japan, we've actually been one of the best performing markets, compared to even the rest of the world. So whether this sustains, and it's still early days, we need to wait and watch for what happens to the earnings and the monsoon. And I think these two are the key triggers besides the inflation and interest rate. At this point in time, it looks like we are kind of probably at the upper end of the range that we think we are going to be operating in for a while, and we need a little more boost on the earnings front for us to start looking good on the valuation side.
All right, Nitin, thank you so much for joining us on NDTV Profit and sharing with us the response your fund has generated and how much of a benefit it's going to give to investors in India looking for diversification.